Welcome to Trading Lounge and the Indices report, and starting with the Australian markets and also starting with the banks, because the banks basically dictate the pattern to a large degree of the ASX 200. I mean, BHP and Rio can take up nearly 50% of the index themselves. However, the pattern that is created on the ASX is quite dominated by the banks. Now, with Westpac here on this 4-hour chart, and we're looking at the top here at 40, so we'd counted our waves up through to here and nailed the top, and now we're trying to nail the bottom down here. Now, in simple terms, we're looking at 5 waves down for 1 and back for 2, and we're looking at all of this as the third wave here with 5 waves in it, and wave 4 pulling back quite close to this consolidation, which was wave 4 of 1 lesser degree. It was lower, so that sort of dictates more of a bearish pattern. And now we're looking down for wave 5. Now we would expect, because the extension's in wave 3, that wave 1 and wave 5 would be roughly the same length. What we're looking for here is we're looking for 5 waves in this particular structure here. I just naturally assumed that we would be looking at 30 for that, but we may be cut off a little bit short and we may have the low in already. Now, the European markets and possibly the Nasdaq as well have another little wave to move down. So we'll probably move down here too, but we'll look at that in a moment. Once we do have a low in here, we'll be looking for a 50-60% retracement level. This current circle here, the bottom is 50, the top is 61.8. That's taken from this current low here. But the main point is that because we got 5 waves here, we'll be looking for a counter trend move, and then we'll be moving down. Now, I've labeled these an A wave and a B wave, but they could also be wave 1 and wave 2. I'm just taking a conservative view of it at the moment. Now, currently on our shares, CFDs around the world, we're net short, and we'll look to change that scenario once I can confirm that we do have a low in, whatever that takes. And once we do have a low in, yes, we will put a few trades out and we'll trade, some of this up through here as such, but it will be very light trading. We'll be looking more so for the move, this other side moving down here, because we got 5 here, and then we'll get another 5 over here. So yeah, that's that. So drilling into wave 4 to wave 5 here, we're looking for 5 waves in that. And that top of that wave 4 that we just looked at, I've got it in a different degree of structure here, but it doesn't really matter. It's this wave 4 here that we're looking for, and we're looking for 5 waves down. Now, it's quite clear that we've got wave 1 here and wave 2 to here, okay? It's possible that this wave 1 could also be here as well, in terms of 1, 2, 3, 4, and 5 into this little area here. And if that's the case, that's where I've made my mistake, because currently I've been counting this down as 1 and 2 and 3, 4, 5 here for the third wave, and the fourth wave and the fifth wave, looking for this low here. And we do have a nice impulse wave here, if you can see. And we also have a little ABC correction here. So it's possible that the low for this market can be in place. We should see this market move back up through here. Now, if I've made a mistake, then it would be in this section here and would bring wave 1 to here and wave 2 to here. And that means that, unfortunately, wave 5 would be here, this would be wave 3, this would be wave 4 here, and we'd be looking for this to pull back to a wave 4 of 1 lesser degree, which would be this little spike here. So let's just take that with a pinch of salt, and we'll look at just $32. Just let's not worry too much about that. What we could look for here is that we wouldn't, if this is going to be a wave 4, it's not going to find tested support on 32.30, okay, the top of group 1 of 32. It can trade above 32.30, but testing it as support. If it found it as support, then we'd be moving up from that point there, okay? So it's highly likely that we could just get an ABC pattern, an A and a B and a C for wave 4, and then look for wave 5 to the downside. Now wave 5, if it's going to occur, would be roughly the same length as this wave 1 to here. So we'd be looking a little bit closer to 30. So this is a real possibility here, okay? So I just don't know. I don't like to call those in unless I can really see a little bit of evidence, you know, and I would like to see, you know, this little structure here, for instance, as 1 and 2 and 3 and 4 and 5 here, okay? And then then the corrective pattern, which, you know, would be across this level, something like that, and then we can move up from that point. But I don't know if that's the case. And the US markets and, well, as I mentioned, the European markets can have another wave down. So we could be, you know, we do follow them. So it's likely that we could be in that scenario. If you have bought at the bottom here, then try to get out at break even until we've got a bit more sort of evidence of a move to the upside. And this would be the same with in more so here with CBA as well. So once again, the same thing here as well. But in this case, I'm quite confident that we have our 5 waves in this first structure here, and then wave 2, you know, into this little rise here, and then 1 and 2, 3, 4, 5, 3, and here. So, but I can see that, you know, calling this low in here is leaving this down through here as well. So, yeah, we're not quite, I don't think that we're quite there. We're close, but we're not quite there. And that brings us to the ASX 200 as well. Now, the ASX 200, as you know, we've been, you know, I've counted this down here. As you saw the banks with WBC with 5 waves down, essentially that's the way that I've been looking at this structure coming down here, even though they're not the same, you know, but they're displaying a better, more of a relationship to the banking sector than to, say, BHP. So, you know, what I was thinking is that, yes, I know that this can be counted down here in different ways, and I've seen different ways it can be counted, and, you know, it's not right or wrong, but I just take the philosophical view that, you know, those banks, if they dictate to a strong degree of what's happening in the market, then, you know, we also need to look at this situation as well. So when, you know, if the banks have got a low, then we need to consider this having a low in here, you know, splitting hairs of where the low actually is, and we'll get into that, but we would be looking for a counter trend pulling back 50 and 60% as well. Okay, so we need to peg the low first before we can look at this retracement level. And also too, with the retracement level here, it's far better off, you know, we can put a little circle here somewhere, whatever, but you know, it's more important to track the move up here. Now, the move up here in the banks and these markets here will be very simple, because it's likely that they're wave 2. So we should see it very simplistic, and that will be 5 waves, 3 waves, and 5 waves. So we should really be able to get very close to nailing all of that down quite nicely, you know. In terms of looking for the low here, you know, yesterday that we were sort of scratching around for it, and essentially we're from wave B, that was a 61.8 retracement level here that we're looking for, well, very close to it anyway, and then we're looking for this move down through here. Now, this move down through here, we're looking at 5 waves, so let's just go in a little bit closer to this as well. So we'd been looking at this as wave 1 and 2 here, down 5 waves down for third wave, and the 4th wave here. And then we were looking for, yesterday we were looking for, well, 1 and 2 in here, the 3rd wave. We were looking for the 4th wave just in here, and then wave 5 down closer to 5,400 here. Now, overnight it's done that and all the rest of it. But this this large, and I wasn't expecting this larger wave 4, by the way, because if that was wave 4 here of this degree, then of blue wave, then this one here should be smaller, but it wasn't the case. So we need to look at this still as wave 3 as we had it, and we know that this was corrective. It was just a bigger, that's the trouble with wave 4, it can just double in size, just waiting for other things to fall in place. It's really a correction in time. But so we need to look at this as an A wave, a B wave here, and a C wave, because we've got 5 waves here. We need to peg that in as wave 4. So apologies about that, but that's life in the markets. And now we're looking for this wave 5 here. So it's going to be, markets don't, there's leaders and there's followers, and markets all tend, when they're in really fear mode, then they'll all lock in together. Everybody will be looking at each other going, what's going on, so to speak, without swearing. But in sort of more relaxed circumstances, you're going to see some turn first and then some follow and all the rest of it. So they'll all have different ways of finding their ways down. Now, we are looking for 5 waves down. We are looking that and this is about the right length too, because when I take in this section here, when I take the distance of wave 1 here, then that's roughly the same distance as it is for this market here. So technically we can have a low in place here. However, things can always get out of hand. We don't have any evidence of a move up so far. So this could be down to here, then an A and a B and a C here, and then 3, 4, and 5. That's certainly possible here as well. So I do suggest that until we have support, back on the 5-5 here, then we need to consider ourselves. This still has a bearish bias. The trend is still down. And as mentioned, we need to look at the banks, and we know that the European markets can also move down lower as well. So yeah, it's just a little bit sort of iffy at this stage here. Just on the 15-minute chart here, it's possible to count 5 waves down through here, and we do have a bit of an impulse wave moving up here. However, if we just open this up a little bit and let's just use this tool here, it could pull back up to this level here, 61.8. So basically group 2 in here, okay? So it can move to this area here and fail, So I don't know if we can put this wave 5 here in play here with this wave 5 and so on, or are we looking at just wave 1 here, wave 2 here, and 3, 4, and 5 down through to here? I don't know that. We just have to see how it goes, but we do have the right. This is the length of wave 1, so we do have everything is fitting quite nicely. I just don't know. I don't have any evidence for a move up just yet, but I know that we're close. Now, when we look at the European markets, let's just start with the Stoxx 50 here. What we're looking at here is, well, first of all, we're from wave B here, we're looking down for wave C. The length of this little move here is the length of wave A, because there's normally an equality relationship between wave A and wave C, and that would be it at 33.50 there. Now, we've been counting 5 waves down here. Now, this wave 1 is short, wave 2 is here, wave 3 is what it is, wave 4 here, but we're seeing wave 5 here, extend out. So we can see that in a way, this trend actually coming down here is actually expanding. It's not contracting. So, it can continue to expand. So the 5th wave could expand as well. So we've got wave 1 here and wave 2 here, and we're looking at all of this just being the 3rd wave and the 4th wave here and the 5th wave down through to here. So we're looking at the low here, and this is, the Australian markets tend to follow the European markets quite a lot actually. There's not when I've done my days of trading futures on the SPY and the FTSE, and they sort of, on a sort of micro level, they're very similar. So anyway, obviously a lot of trade going on there, but between those two countries. So so from wave 4 here, we're looking at this as being wave 1 and wave 2 here. and then looking at all of this as wave 1 here and wave 2 here, and all of this here as wave 3 here, and then we're looking for wave 4. Now, wave 4 normally pulls back to wave 4 of 1 lesser degree, so it's a little bit short. The 38.2 retracement level is also just above this as well. It's possible to have this as an A and a B and a C here and finished, or it's going to have a little push up through here in the next session and then look to fail. Now, and then we'll be looking down for wave 5 here. So at this level here, I've got 33.60 because this is the length of wave 1 here, and also the 61.8 retracement level of wave 3 as well, I think. So we're looking at 33.60, 33.50 for this to fail here. We wouldn't turn bullish unless we found this number here as support, because that's, you know, all we see a very nice 5-wave sequence up here, which would be wave 1 here, wave 2 here, up for 1, back for 2, 3, 4, and 5, you know, starting to build there. We just don't have it at this stage. And this would run through to the DAX as well. So we're looking down at 10,700 roughly here, and maybe a tad higher. That's the length of, anyway. So yeah, once again, we wouldn't, this wave 3 here, well, we've got wave 4 here, we've got 1 and 2, and then 1 and 2 and 3 and 4 and 5 for the third wave. So we've got the 4th wave here, then the 5th wave down here. So that's where we are at this moment with this. So, you know, unless we see something different, this market can obviously come back up to the wave 4 of 1 lesser degree and maybe a tad higher or whatever, but we don't want it finding tested support on this particular number. We need to see failure there, and then we need to track 5 waves down through to here. And this also goes through to the AEX2. A nice pattern here. We've got a very clear top here. And I have to say that it's just a point worth mentioning is that with the trading levels, it's normally, what I normally find is that wave 3 is the one that touches the level first, and then the reaction is always wave 4, and then we're always looking for 5 waves above the level. So in this case, it's all pretty perfect here, and we're also looking for 5 waves down through to here. So let's down into 460, 465 in this little area through here. Obviously, the old low here is going to play out here as well. But once again, I need to line this up. I need to sync it with the DAX and the Stoxx 50. So we're looking at slightly different count all through here, but we're looking at this low here as wave 3 and 4 and 5. It is possible to have a low in place here, but I think we just got to follow the DAX on this one here. So looking at this on the intraday level here, just coming back up to, well, wave 4 and wave 2 here. So wave 1 and 2 here. Once again, like the other markets, there's a little bit of an odd count calling this wave 1 here, I have to say as well. You know, it's possible to have wave 1 in here and wave 2 to here, but I need to sync it with the rest of the world. So wave 1 and 2 here, and then it gets quite clear from here. So 1 and ABC for 2, down for 3, complicated 4th wave here, down for wave 5 to make 3, cross for 4, black 4, and then down for 5 to make 3 here. So really we're looking for wave 4 here that can pull back to this wave 4 of 1 lesser degree, which it is. And I haven't checked where the 38.2 retracement level is, but you could do that. Wave 4 here, you know, we'd expect wave 4 to be more complicated than a simple A, B, and C wave here as well. That may not be finished here, so that can move up through to here. And also remember that it's possible to have a low in here, but I just don't have enough evidence to call that in just yet. But let's just see how this travels. Now, if we get a move down, these are the two target areas here, the 462 and 460 area for this market. That's from current highs. If we make a new high here, then I'll need to lift these up through here. But once that's done there, then we'll be just looking for a 5-wave sequence in this area through here to find that final low in there. But we should look at this being a little bit more complicated in here as well. I'll have a quick look at the FTSE, but it's much the same as well. We're looking for wave B and we're looking for 5 waves down here. We know this is weaker here, so it's probably the better short, so it can move down lower as well. And yesterday we were looking at 1 and 2 and 3 and 4 and 5, so we're still looking down to these sorts of numbers down here for this market. Now I want to go over to the Nasdaq, and with the Nasdaq here, we've got, I just want to go back to this point here, is that we had these 3 waves here. So this is not the Nasdaq comp. This is the top 100 in the Nasdaq. So the price is going to be simple. The other market, the comp is working at around 5,000, a bit lower, so it's a bit out of sync. But anyway, this is top 100. So we had this 3 wave here. So we know that, and that from that point there is that if we bring that here just roughly as the high here, we can come across here and it hasn't touched the highs here. So I know that, well, this is the first leg down and it's corrective. It's in 3 waves, okay? So then we need to look at this as, well, I've got to count this up as a corrective ABC, which it does fit quite nicely for a B wave here. So then, like the other markets around the world, we need to look at 5 waves down here. So we're looking at 1 and 2, and all of this is the 3rd wave here. A 4th wave, like the other markets, it's a different degree of structure, so I've probably got that wrong. That happens a lot with me, but the counting is more important. That's where my attention is, but I'll try and improve on that. So wave 4 here, and then wave 5 down here. Now, if I look at Apple, if I've got that up here as well, so with Apple, if I just squash this up a little bit here, well, not to worry about that, can be an A and a B here, so that doesn't really matter. But what matters here is that we're counting 5 waves down here for wave 1 and back for wave 2 here. And then we were looking at 1 and 2 and down for 3 and across for 4 and down for 5 here. And then, oh no, I know where we are now, right, 3, 4 and 5 here. So I'm looking at this being wave 4 coming back to this wave 4 of 1 lesser degree, then 1 more wave down for C here. So I am counting 1 and 2 here because we got a big B. I haven't got the space here, but this is a larger B wave here. So we're looking for 5 waves down here. And so I can see from the Nasdaq and some of the leading stocks that we've got this situation occurring here. It does appear to be a little 5-wave structure in here, but we'll watch that and drill into that a bit carefully. So so the Dow Jones and the S&P 500, I count these guys down, and it's probable that they can have lows in place already, but like before, we need to consider what's happening in the rest of the world. So it's possible that we can still have a move, into this sort of area through here, and then 1 more low in here as well. It has been a little bit difficult to count this. Now, if I had to recount it, I would have to count it like this here. And all of this down here would be wave 1 and 2 here. So I'd have to count all of this as wave 1 here. Now, what this means is that this wave 1 here would be longer than wave 3. So wave 5 here would be shorter through here on the Dow Jones. So I don't really have any evidence there. I also want to have a look at the bearish picture as well for the US markets. Now, it is possible to have a top in play here. I don't think it's the case, and I think we've got 1 more little push to the upside here, but I want to make you aware of what can be here. So once again, when we're talking about levels, we're normally talking about when a market reaches a level, it's normally a third wave of some degree of structure, and then wave 4 comes into play as the reactionary move. And then we're looking for 5 waves to the top. Now, once the 5 waves completed, then we always get the ABC. And this is a classic trading levels pattern where we have the arrival, the reaction, the first high above the level, and then the corrective move. So it's normally 3rd wave, 4th wave, and 5th wave. And in this case here, we can see that this market that's been moving up here, you can see that it's churning a lot, isn't there? There's a lot of volume obviously being, churned over, but the market's not going anywhere. And it's it's a sign of a top, in play, and we're just trying to figure out where the top is, and it's a very messy pattern. And when you have a look at all the other US indices and indexes and so forth, they're all showing much the same picture. Some of them weaker, like the Dow Jones Transport that I like, is actually leading the move down through here. And when you have a look at the New York comp, then you start to see that a top can be in play. You can start counting up here quite nicely up here. Main point here is this is the sort of area that would be looking for this market to pull back on. And that's all very normal. I mean, you have a look at a $2 stock because we're working with this particular number, and it is all just ratios and numbers. And, it could be 20 cents or, $2 or $20 or 200. So, you start to have a look at other markets that have that are working this particular number, and you'll see what type of correction that we could be looking at here. But definitely, so with that in mind, like I said, I don't think it's the top yet, but if it was a top, we've got an unusual top. So this would be the wave 4 here. We'd be looking at this as 1 and 2 here, 3 here, 4 here. Wave 2 was complex, so wave 4 can be simple, and then a 1, 2, 3, 4, 5 here. Now, I know that's all very dodgy, but if you have a look at the New York comp and some of those other indices, you'll see that it fares out very nicely like that. If we get a weekly close this week that's quite down, then we know that we can be looking at a top in play here. But as it stands, and this is the bearish count here, so I need to look at all this as 1 and 2, and then 1 here and back for 2 here, which would be the 2100. So really, when we do find the low, if it's this one or one more like the European markets, then we want to see this market finding support on 2100 here. Failing to do that, we'll be very mindful of the situation here, and we'll be looking at further this. But when you think of the Australian market that needs to correct those 5 waves down on Westpac, then we're looking for a correction, a corrective rally in the market, and that suits better with there's still the bear market here, and with the bear market here, we look at this as an A and a B and a C here to 2100, a 61.8 retracement level, and then failing from that point there. So we need to be mindful about that. The European markets, however, still got that. This is still got another low here. So with the bullish count, the progressive count, this is what we're looking at here. We're still looking for one more new high here in 3 waves here. I know that I'm grasping at straws looking at this, and we won't be able to confirm this, but this will be the catalyst here. This particular number here as support or resistance here will be what we'll be looking for. So we want to keep 2 counts on the table. But even if we do move up here, then that will be the top that we'll be looking for. So I don't want to get fixed on one particular thing without any evidence of anything. You know what I mean? So here we'd be looking at this as the A wave, the B wave, and 5 waves down for the C wave. Now, as I mentioned, we can have a low in place here for this market here. That's not a problem. But we know that the European markets still have, looking at this little rise here as wave 4, then a move down for wave 5, so to speak. So when, I've counted this from wave B here as wave 1 and 2, and all of 3 here, 4 here. We've been working through all this as 5 waves to nail this down here. That's fine, but I just wish the European markets were synced in with this here. So we just need to be careful that we can have, we can just have another 5 waves down here. That's the whole thing of this. I just don't know. We just don't have any sort of as we were looking yesterday, we're looking at this being the low here, and it could be, but we also need to see that we need to see sort of where we are. So if that's the case, then we'd have to be looking. Let me just double check here. Oh yeah, we're moving up past there, because that would have to become wave 1 and 2 here, and all this would have to be wave 3 here with wave 4 here. But you can see that this is up to the 50% retracement level anyway, so we'd expect it to fail at the 38.2 retracement level here, or the wave 4 of 1 lesser degree, which is here as well. So let's just see how this pans out. We've got to give it a bit of space in terms of an A wave, a B wave, and a C wave being the top right here. I think I'd have to go in and check that, but check 5 waves in here. So that could be the top there of the wave 4 and working lower from that point there. So we could say a breach of this consolidation in here somewhere would be the end of that. Let's just sort of nail this down for day traders. So yeah, so look, a move below 2075, obviously then you'd be in a bearish mode from that point, but technically that's sort of as close as you're going to get for it. So another way to look at it, if the market, we're in group 2 here, still too large, isn't it? Yeah, it's not enough here. So the 275 as a retested resistance is obviously where it's going to collapse from. But yeah, and also too, if you can see 5 waves coming down from the high here, then if you see 5 waves like that, then you know that it's a bit doomed at that stage there as well. Anyway, just trying to find a low, splitting hairs, I guess. But yeah, our main point for all this is because we trade equities the most, then we'll be tightening our short positions up, and then we'll be looking to go net long at probably when we got a bit of evidence, maybe this week. Okay, cheers.